Today is advanced algorithmic trading. And the reason why I want us to talk about this advanced algorithmic trading is because there are some times when you will look at this chart and it's going to be so difficult to you to actually know what area to get in. You'll be like, how do I even get into this trade? How do I get into the trade? I can't see a fair value gap. I can't see any low resistance liquidity. So how would I have gotten into this trade? What would I have used as a point of interest? Now, in this session today, I will cover how you can get into such trades. An example we'll be using as an example is GBP US dollar. And the reason we're using GBP is because GBP is a very complex pair to trade. And what makes it complex is because it's one of the most tradable pairs. One of the most traded pairs in the world is GBP US dollar. Now, the more people trade a particular pair, the more liquidity that pair will have and the more manipulated it will be. And that is why GBP US dollar, you need to understand advanced algorithmic trading if you're going to be trading this pair. Now, we previously did an analysis on this GBP US dollar in our previous session. Val and Yan, I think you guys,
Yes. Yes.
yeah,
Yes.
yeah, and Stanford, I think you also saw the video, right, on GBP US dollar on the analysis. So
Yes, I did.
you guys already understand the bias for this one. The bias is we're bullish. We want to see a continuation to the upside on GBP US dollar. Now the question is, how could I have gotten into this trade? Because if we look at this on the weekly time frame, we can see. So let me remove this. On the weekly time frame, we can see there's this fair value gap here, this weekly fair value gap. Now,
Yeah.
this is a very wide fair value gap. And if we say, okay, we want to use this fair value gap for the trade entry, that means price coming down into that fair value gap. We'll now have to wait for a confirmation. What time frame would we like to see a confirmation?
That's it is weekly, right?
Yes.
Okay, 30 minutes time frame.
So remember, you count 3 time frames to the left-hand side. Yan,
Yes,
1
Mr.
hour time frame,
Emergency.
sorry.
1 hour time frame. So you go to 1 hour time frame and look for a break of structure. And right now you can see that this has broken a 1 hour structure. We literally just broke a 1 hour structural high. So GBP US dollar still has an opportunity for you to actually get into a buy setup because we literally just broke a 1 hour high. So price is going to come down for a retest before the major move. Now, would you be waiting for price to break? Can you see how high this high is? This is
Yeah.
literally gonna take, like, if you calculate from this low to this high, that means you literally be waiting for 223 pips, price to rally 223 pips to the upside, which is around 1.8% to the upside before breaking structure. I personally wouldn't wait for this 1 hour to break. Yeah, and you already know this. I'll literally be in on this trade right here. I'll be in this trade right here. While you're waiting for this 1 hour to break, I'm already in this trade right here from this low. How do I get in from this low is what I'm going to show you, which is the advanced algorithmic trading. And how you can get in is you can go to the daily time frame. Now, on the daily time frame, you can see we'll have a daily high here.
Yeah.
We'll have a daily high, and we'll have a daily low right here as well. Now, we've not broken that daily high yet. So now you're looking at this. There's a daily high, a daily low. Now, how do you get in from here? There's nothing really that you can see right here that you would say, okay, this is what I'm going to use. Now, this is where it gets interesting. You take it to the line chart. The moment you take this to the line chart, you can basically see that we were trending to the downside, and this was a daily break of structure. This is the bodies of the candle.
Yeah.
And you can see this right here was the daily high that got broken right here. A daily high got broken here. All you do is you mark that high. Once you mark that high, you go back into your normal candle pattern and then you box this entire move from here to here. Now, the line chart is only showing you the bodies of the candle. But when you now make this the candlesticks, you can now see that this is the move from here to here is the move. Put it the entire position in a box from the low to this position. Put it in a box. Now scale down to the lower time frame to look for significant areas to use as a point of interest inside that red zone. Areas like what? What areas are you going to be looking for? What specifically can you be looking for? An
A fair
example.
value gap.
A fair value gap, exactly. You go straight down to 4-hour time frame and you start looking for a fair value gap resting inside this red zone. And right here, you can see a fair value gap resting right here. Now, what time frame break of structure would you like to see once you see price mitigating this fair value gap?
15 minutes.
15 minutes time frame. Now you scale down to 15 minutes time frame to look for an entry. So let's go to 15 minutes time frame. And on 15 minutes time frame, let me just take this back so it's much easier for us to see. And right here, you can see the 15 minutes time frame. So I'll remove this. Now you can see on the 15 minutes time frame, you can see right here, price was trending to the downside, created a lower high, a lower low. Now we need to see whether this is the low or this is the low. So how do we see that? We just put a line across one of the lows and then we zoom in. Zooming in, you can see that. So this one seems a bit complicated, but what you do is if you zoom in, you can see that despite fact price created a relative equal low here. This is why I always say GBP US dollar is very manipulated. If you don't know what to use between these two, you can literally just use here as your high. You can literally use this one as your high right here and just wait for this high to get broken. Wait for the high to get broken right here. And right here, you can see price broke that structure. And after breaking structure, what did we come down to mitigate? What is this resting right here?
Last down close candle.
Exactly. Price came down into a last down close candle. And right here would have been your entry. Stop loss, overall low. Now, let's use another broker to take a look at this because I want us to see this low. I want to see what's resting below that low. So if we look at it with another broker, let's put a line across. Now, if we put a line across, can you see that there was a run on liquidity here?
Yeah.
So that means this run on liquidity here, that means this is actually the break of structure right here. This was the break of structure. This right here was the break of structure. So you could have still used this retest here into this fair value gap as your entry. So even if your broker, you can see that this is one thing I always talk about. This is why I tell you guys, always make sure you're looking at your data feed from two different brokers. Two different brokers. Never take just one broker data feed and just take it and just trade with that. Always have a second opinion, because if you didn't look at the data feed from Oanda, you wouldn't know there was a run on liquidity. Now, Oanda, if you use this Oanda's entry, which is right here, you have a better risk to reward trade. If you targeted this 1 hour high here, this is a 1:5. You have a better risk to reward trade. 1:5, price has already activated you, went straight to your take profit, you're out. Now, if you use the data feed from FXCM, this right here would have been your entry. Right here would have been your entry. And your stop loss will be this overall low. And if you're targeting the same 1 hour high, it's a 1:3. Can you see the difference? FXCM, you would have had a 1:3. Using Oanda, you would have had a 1:5.
Yes,
A
Mr.
1:5. So always make sure you compare the data feed This will help you immensely to help you in setting your stop loss. Because if you were using you could have even been skeptical in taking this trade if you're looking at just FXCM, because you'll be looking at this as a relative equal low without knowing that there was already a run on liquidity already happened here. So you should be working with this high that got broken as your retest. So the one thing to take note of is this: when you cannot see what to use as your point of interest to get into a trade, remember, that is the reason why we have the line charts. The line chart will make it a lot clearer for you. You can easily use the line charts to see the bodies of the candle, the closures, and everything. So right now, you can basically see that GBP US dollar has literally recently just broken 1 hour structure after mitigating a weekly high. So let's take a look at this. So this is actually another trade idea for you guys. If you have an interest to look for another trade, even though you guys already had a winning trade this week. So it's up to you if you want to look for another trade. But if not, you can take your win already. And August time is just coming in now. So you can take the win that you've taken this week and be done with it. Or if you still want to look for another opportunity, this right here is still another opportunity. We anticipate for price to come. So what would you use as your point of interest now? I'm asking you guys, what would you use as point of interest? After breaking a 1 hour high, what are you going to use as your point of interest?
Okay. Do we want to see a break of structure, a 15 minutes break of structure, time frame break of structure?
From where? From what point of interest? Where would you use as the point of interest to wait for the 15 minutes break of structure?
At this break of structure, just here.
Here. So now, as you can see that we've broken structure, price is retesting. Price is going to retest on something to use it as support to continue higher.
Fair value gap.
Exactly. So it can either be a fair value gap or it can be a last down close candle.
Would it not be the last dark candle, where you have that red dot at the bottom? Will it not make its way all the way down there? Yeah, into that area.
Yeah, price can still decide to come down this area. It's not impossible. But now we try as much as possible not to predict what the market will do. We only focus on what we see. We don't try to say, okay, price will definitely come here or there. Now, after a break of structure, you can see right here, we have this 1 hour high. Remember, we're working with, our initial key level that we're working with, which is this weekly fair value gap. After we mitigated this weekly fair value gap, all we wanted to see was a 1 hour break of structure. And right here, we broke that 1 hour structure. After breaking 1 hour structure, we want to see a retest. So what we do is we scale up time frame to look for key levels that price could potentially retest. And right here, we have the last down close candle. This was the last move to the downside that took liquidity, broke structure. Price will either come down here to mitigate either the bodies of the candle or run the liquidity before a reversal to continue to the upside, because GBP US dollar, as we already know, is bullish. Now, mitigating this position, we don't know whether price will tap either it's this high or this high or this liquidity. We do not know. And we don't even care to know which area. We can either look for a 5 minutes break of structure or a 15 minutes break of structure.